Hello and welcome to my video. So today I want to do something different, right, which is more on the educational basis, right? So I want to talk about the Fed target rate cuts, right? So now there's a lot of hype out there about the Fed is going to cut interest rate at least by 25 basis point in September, and I hope that after this video, right, you will have the necessary resources, right, and means to decide for yourself, right, whether these are really hype or there's really going to be a chance of a rate cut. Now, recently you will see a lot of this kind of news, right, where certain Fed officials talk about rates are too high, they should cut 50 basis point, should cut 100 basis point, right? So I believe this is more or less irresponsible or even fraudulent, because these are Fed official and they should know, right? They should know whether they are going to cut rates. Now, over here you see these 3 months government bond yield, right? So this is important. If you have seen one of my old videos, I talk about how the Fed set the interest rates, right, using these 3 months government bond yield. Now, over here, what you can do is you can add in the what they call the federal funds target range, lower limit and upper limit, right? So you can add this, and then you can add the upper limit also, right? So I'll do a quick introduction to this, right? So you must know that the federal rates, the interest rate itself, right? When they say that they are going to maintain the target rate, or they're going to cut rates or raise rates, they are actually talking about a range of rates. Okay, so this is the upper limit and the lower limit. Okay, so over here, uh, you can see that the upper and lower limit, they always follow this 3 months treasury yield. Now, I believe this was there's something wrong with this display. Yeah, how do I set this? Okay, so this is the target uh range, right? So you see that um this this actual change in the target rate always follow these 3 months government bond yield, right? So it's always to the right of this government bond yield. So that is why the Fed is always behind the curve, right? Because only when the rates has already moved up, rather the yield has already moved up, then they will change the uh target range. Now, why is this so? Because if you understand the mechanism, it's like this. When the Federal Reserve say that they want to maintain certain target rates, right? And if it's not within existing range right now, that means the actual movement of the bond yield, right, is outside of this range, right? Let's say they say they want to cut the target range by 25 basis point, and there's no real demand out there, right, to buy the bonds, right, to push to lower down the yield, right? What they are going to do is that they will then have to monetize the debt, right? Another way of saying this is quantitative easing. Another crude way of saying this is that they will have to print money to buy from the government. So it's funding the government using money that they printed, right? So in order not to do that, right, then they will always follow what is the uh market supply and demand that causes the change in the yield, right? So all the time, right, unless this government bond yield has changed, right, they will not change the target range. Now, if you see what is happening right now, okay, which is over here, You see that we have for a few days we have actually went down below 4.25, right, since maybe August 13th, right, and it stay below this range. Previously there's only also one day where it temporarily goes down. That is on the 7th of April. Okay, so what happened on the 7th of April itself? If you are active in the market, you should know that 7th of April is where there is a bottom in the S&P 500 or the Nasdaq, right? It actually did a sharp move down, a three-wave move down, right? And then it turned on the 7th of April itself. Okay, now this is not that important for the time being, right? Um, but what you should know, uh, the minimum take home from this video is the importance of this chart, this 3 months government bond yield, and the target interest rate upper bound and lower bound. So closer to the uh, FOMC in September, and you take out this chart, if it is within this 4.25 or 5, then we can be quite sure that there will be no rate cuts. Okay, if it fell below and stay below for some time, then that will be the the target cuts that you should expect in September. Now, other than this, right, the next thing we want to know is what really is the expectation. Okay, from a macro point of view, you need to understand that um, the longer the tenor of a bond, right, the more sensitive it is to changing interest rates. Now, for that, then you see that I have a few tenors over here, the 1 year, 10 year, 20, and 30. So it start to move from the 30 years, and you see that actually this yield has been quite stable since April. In fact, it has moved up. So uh, those smart money, right? They are not really believing in a rate cut, at least until now, right? From for the entire month of August, right? They don't really have a change in the yield for 30 years. It's the same for 20 years, and it's the same for 10 years, right? So because these longer tenor are more sensitive to any change in interest rates or expected interest rates, right? So you can monitor this as a leading indicator of what's going to happen to the 3 months yield. Okay, right. So interesting thing over here is that you see that actually this 1 year is actually lower than the 3 months. Okay, right. um Actually, I only put in this 1 year to show people that, when they talk about interest rates, right, what are they really talking about? They're not talking about, some people will tell you, oh, it should be the 1 year annualized rates, right, or maybe the 1 year government bond yield. The answer is no. Okay, the answer is actually the 3 months. Okay, so I put this to more of a educational information here, right, that actually when we talk about interest rates or the Federal Reserve target interest rate, we are really talking about the 3 months. Okay. Now I will show you other things over here, right? So over here, let me just uh, recollect these these kind of statements from the federal officials, right? I think this is irresponsible and you're fraudulent, right? So don't believe in this. Look at the data itself. Now that you know that minimally, you can look at this and you can look at the longer tenor yield. Now the next thing I will show you is how is the market betting, right? So three different sources. Okay, so over here you see that I have this investing.com. So this is the monitor tool that shows that what they expect from uh, the September FOMC. Okay, so this all shows that actually the 25 percent basis point cut, right? It ranges about 60 to about 73.3%. Okay, so it's not certain. and the no change itself, right, is also almost 38%, at least from poly markets. Now I would prefer the poly markets because they show the how the odds have changed, and real money is being put into these bets. Okay, so these are three different places you can get roughly similar information, right, on the bets for the rate cuts, right? So it's not 100%. And now that you have, how to read whether there's any change using the 3 months bond, you should know that, yeah, that these odds are still okay, right? In fact, you can even bet that there will be no change, right? The odds should be quite good. Okay, then I want to address the question on why is the market uh moving up, right? It is so high already, right? And why does it keep going up, right? So a lot of people who don't know anything, right, they will say that, oh, it's because um there's the economy is really good, there's real buying in the markets, there's a lot of participation. That is partially true, but it's not the entire truth about this. And then there is this thing about, we go back to the yield. Why is if the market is so bad, or if governments around the world are dumping the treasuries, right? Why is the yield not shooting up, right? And over here, I will tell you why, exactly why. This is the overnight reverse repo agreement, the balance sheet, right, by the Federal Reserve, right? So a lot of you knows that the Fed itself, they have been tapering, right, in terms of the holdings of the government bonds, right? So that is kind of like the face of the Fed, right? But actually, and if they do anything, if let's say they buy the debt, right, is a direct QE, right? Is it is telling the world that I am printing money, I'm monetizing the debt to fund the government. But there is actually kind of like a stealth liquidity that has been happening since uh the start of 2023. So you can search for this, right? Is this the actual website from the Federal Reserve Bank of New York? Okay, so I have two screenshots over here. I'll show you this one first. Okay, so over here you see this is the peak, which is the end of 2022, December 30th, 2022. Right, there is 2.5 trillion worth of cash in the Fed, right? So since then, so it's kind of like if the Fed wants to restrict money supply, right, then they will they'll try to borrow money at certain interest rates to those big institutions. We are talking about banks and funds, mutual funds, all these, right? They can tap into this facility, right? So this facility has been paying like 5 point something percent, and I think for the past year it has been paying 4.25 or something, right? So when this happens, right, it kind of restrict the money supply, right? And that peaked in December 2022. Since then, you see that this balance has been going down, right? So what happens is that um, there's a flush of liquidity, right? It's not shown on the actual Federal Reserve balance sheet or something, but this has been kind of like I no longer need your to borrow money from you, right? So I take back my bonds, and then you can get back your cash, right? So um so what do they do with this cash? They will go and buy the government bonds. That means the banks and the mutual funds, they will buy government bonds, they will buy stocks. That means the equity market is being pushed up, right? So from $2.5 trillion, and as of yesterday 21st, this is published daily, by the way, so you can actually see how this amount changes. We are only left with 25 billion. That is just 1% of when it was at its peak, and this is the lowest level since end 2022. So uh this pool of stealth liquidity or hidden liquidity, right, is going to dry up very soon. Now, in my previous video, I talk about um how this may cause a sell down in the market, right? So the narrative that I paint is this: um this overnight reverse repo agreement dry up, so there's no more liquidity being pumped into the market crashes, people run into bonds, right, or the short-term bonds, causing the yield to fall, right, and then FOMC happens, right? FOMC happens, and the Fed can cut the rates. So this is the narrative that I paint in my previous lengthy video. Okay, so I believe that this could still happen, even that we are only 35 billion left inside this, right? And if that happens, that narrative will still stand, right? There's still time to the next FOMC, right, which is about 3 weeks. So within these 3 weeks, can the market crash? I think it's possible. Okay. Now we then look at the S&P 500 or the Nasdaq. Uh, Let me remove this now because it's affecting my charts. Okay. For those of you who have been following me and my alert wave, you know that I've been trying to catch the fifth wave, the end of fifth wave, and the very last one is probably this, right, where I have charted 1, 2, 3, 4, 5, right. I believe I did not update the all the charts over here, right. This This is slightly an extension, the 4 and the 5 somewhere. Okay. So you can look at this, right? So it's 1, 2, 3, 4, 5. I did not update the Nasdaq. Right. So if this is true, then we have actually started the correction since 15th of August, which is 1 week ago. Right. If I'm correct, we should start to see the market coming down. Now, just looking at the indexes itself is obviously not enough, right? Sometimes we look at the components, right? So the Mac 7, they are important of because Nasdaq and S&P 500, they are market cap weighted, right? And the higher the price, the bigger the market cap, the more they affect the indexes, right? So over here you see that actually the Mac 7 hasn't been performing very well for the past few days, right? I will say few days first because now I look at Apple, right? Apple has looks quite sick, right? So in alert wave, this will be a ABC, okay? ABC here. I mean I can do a quick one just to update this, right? It will look something like this, and then you have the C that is probably broken down into a 5 wave itself, right? So it will look something like this. Okay. Now this 5 waves is not ideal because of the overlapping, but because this is a corrective movement, so I will just leave it here, right? Then if you look at this Microsoft, right? Uh, since the 8th of 8th of April, it has moved on in a straight line, right? Of course, there is earnings and stuff like that, right? But you can see this great reversal over here. Okay, this is the daily. There's this reversal over here, which follows the earnings announcement on 30th of July. Okay, so it has already turned down. Apple has turned down long ago. Microsoft has already turned down. Nvidia. Nvidia is kind of like the bellwether of the bellwether, right? So you can see that the S&P 500 or the Nasdaq follows very closely. Sometimes at certain time of the trading session, right, they are purely moving because Nvidia is moving. Okay, so over here, you see that since 12th of August, right, it has also been not really moving that well, right, consolidating, but instead of going up, it went down, right? So over here, sometimes I like to study the volume. Okay, this is a doji, which is usually a reversal sign, but I would say that, and we can wait for confirmation. Right over here is another doji, so this doji reverse this doji, right? So we can see what happens tonight, right? If I'm not wrong, it should go down. Okay, maybe even to 168. We'll see. We'll see. Okay, this is purely speculation. Amazon, same, right? Hasn't been doing very well. This movement is a ABC. Okay, this movement is a ABC here. Uh, how to identify this is actually quite simple, right? Uh, when this wave move down to into this territory, this will no longer be counted as a 1, 2, 3. It will be considered ABC. Okay. The degree over here, if you haven't been following me for my alert wave, you don't really need to care about the degree. So this is I haven't been doing this update for the stocks for a long time, but doesn't matter. Okay, I may spend some time over here to update all these wave counts, but just know that these are not updated. Now this is Tesla. Tesla is interesting also, in the sense that I don't want to go dive too deep into this, right? If you want, you can pause it here and look at this wave count and this Fibonacci. Basically, this movement I identify as ABC, right? And then I see this Fibonacci over here, right? Which has certain relationship, a perfect relationship, 4.236 times of wave A for this entire wave. And then over here, you see a symmetric triangle. Usually, symmetric triangle is a continuation consolidation, but over here, I don't think so. Based on alert wave, and also because uh, if you see this breakout and then come back down, right? I mentioned before in my in a few videos that sometimes I keep broken trend lines because a turn back into the trend line, especially when it is a triangle, right? And then it it breaks through the other way. Usually, it means that there is going to be a very big fall or a very big rise. So a fake breakout, right? Tells me that the other direction will be very strong. So I do expect that if Tesla breaks down, right, it will at least go to 273 or even make new low, right? So this for Tesla. Meta, similarly, 15th August, since last Friday, right, it has turned down. Okay. And Google, you see that I've drawn something over here, like this parallel channel, right? And if you look at this, interestingly, this did not make a new high. Okay. So likely this will be a wave one and a wave two. And for those people who knows about alert wave, you know that wave two sometimes can correct all the way to the to the start of wave one, but it should never breach this. If not, then we will need to recount this. I did not do the alert wave for this, but just a high level looking at this. You can see like this is likely a ABC, right? X probably an ABC over here, and X, and then we have it's probably a 1, 2, 3, 4, 5, right, for the last wave, right? So this is kind of like a triple combination, okay, triple not combination. So it will be a WXY, uh, WXYXZ, right? Likely it's like this. I if I really want to do this, I may need to study in depth, right? But high level, a quick one will be something like this. So this is wave one, wave two, okay, for Google. Netflix. I believe I have plotted this quite long ago, right? 30th of June. Yeah, I probably identified this as a peak last time. Yeah, because I haven't been updating the individual stocks, right? So, it has already peaked since 30th of June. So, this is Netflix, right? The last one is I'm not sure why I added to this watch list, but last time when I was talking about um oil, right? I talked about ExxonMobil, right? So I'll just remove it here. Okay, so talking about the how the entire market has moved, talking about interest rates and looking at individual stocks, especially the Magnificent Seven, right? It gives us a picture that the market has overrun its course. I mean, this is the hypothesis that I'm proposing to you right now, and it has already started to turn down probably since last Friday. Okay, 15th of August, right? And thus, my bets will all be kind of a short the equity markets, right? And then I will actively monitor the 3 months government bond yield, right, to see what is going to happen during the FOMC in September, right? So this is something that you do not need to actively look at it maybe just once a day, right, or even closer to the FOMC 1 week before you start looking at the longer tenors to see how are they behaving, right? Because the lower tenor 1 year and below, they are quite insensitive to rate change, right? So you look at the higher tenor to see what is going to happen. Okay, so this is the entire hypothesis that I have for you, right? So after this video, I hope you know how to gauge whether what anyone say about the rate cuts in September is going to happen or not, and how do you actually assess the entire market and trade it uh, based on all the information that you have. Okay, so this is a lengthy video. I hope you learned something out of this, right? And I hope that I haven't been too boring on about this. Okay, so yeah, as always, manage your risk properly, right? And good luck. Thank you.